welcome back. I'm Rachel. You're watching 𝐃𝐤𝐽 TV live from Sydney. This is the Stocks in Action show. The S&P ASX 200 is up today, gaining 39.70 points or 0.56% to 7,073.50 at 1140. The top performing stocks in this index are Downer EDI up 4.70% and Viva Energy Group up 3.80%. Over the last 5 days, the index has gained 1.09% and is currently 0.30% off its 52-week high. 7 of 11 sectors are higher today. Energy is the best performing sector, gaining 1.07% and 0.12% for the past 5 days. On that note, let's take a look at the major news from ASX listed stocks today. Why Brainchip shares trading up today? Well, the share price of Brainchip Holdings were quoted at 0.59.5 per share at 11:34 a.m. this morning, as the company has shared its March quarter update. Via their ASX announcement, Brainchip shared that the cash balance with the company as on the 31st of March hovers around $20 million as compared to $19.1 million in the previous quarter. During the quarter, Brainchip had net cash outflows from operating activities of $3.8 million as compared to $2.7 million in the last quarter. Also in the March quarter, Brainchip Holdings got added to the S&P ASX 300 index and the All Ordinaries. Moving on to the next stop, Tabcorp's $3.5 billion for the wagering and media arm, better than demerger Citi. As per the financial research firm Citi Entain, $3.5 billion offer for Tabcorp Holdings' wagering and media business is a better option for shareholders than a demerger. However, the proposal is still subject to due diligence, financing and regulatory approvals. Tabcorp is also assessing the offer in relation to a wider review that could see the business spun off instead. Citi stated a demerger could add time and cost to the process and offer no guarantee that the separated business would trade at a premium to Entain's offer. As per the Refinitiv data, Citi mentions that its PT could increase to $5.6 from $5.3 if the business is sold for $3.5 billion for Tabcorp Holdings. Now let's see what the financial research firm Jefferies has to say about this stock. Cleanaway set to benefit from the waste sector's growth prospects. Jefferies stated that Cleanaway Waste Management is the sector's leader and that it's well positioned to benefit from growth and consolidation opportunities. That's amid a flurry of deal activity. Bingo Industries agreed on Tuesday to a $2.3 billion buyout by funds managed by the Macquarie Group. As per Jefferies stated, the Bingo deal highlights the attractiveness in the waste sector, which features defensive characteristics and consolidation opportunities because the investment is increasing for the sustainable treatment of waste. Cleanaway Waste Management will buy certain Sydney-based assets of Suez SA for $501 million. That's after the French firm's €13 billion merger with Veolia dismantled a deal CWY had negotiated with Suez to buy its local recycling and recovery unit. Meanwhile, as per the Refinitiv data, Jefferies is holding a buy rating and a $2.62 price target on Cleanaway Waste Management. Also, Cleanaway Waste Management stock is trading 1.908% higher at $2.67 per share at 11:34 this morning, Australian time. Moving on to the next stock now, Latin Resources starts a maiden resource estimate for Noonbinberry Latin Resources, shared on Wednesday that it has received the final batch of assay results to start the maiden resource estimate for the Noonbinberry halloysite kaolin project. This last batch of results from the Noonbinberry project had displayed quite impressive high-grade halloysite grades. Latin Resources is now in a position to hand the present database to independent resource consultants, RSC Mining and Mineral Exploration, to immediately start the maiden mineral resource estimate. Meanwhile, Latin Resources stock's last traded share price was 0.047 cents per share at 11:35 this morning. Finally, here's the last stock. Strike Energy remains well-financed after an exciting March quarter. Strike Energy has witnessed another exciting quarter that ended on the 31st of March 2021, and it remains well-funded to deliver against its vision of emerging into first integrated gas, renewable energy and fertiliser company of Australia. Strike Energy's performance exceeded its expectations with the following key highlights. New gas acreage wins in the Perth Basin bid round, initiating the Project Haber fertiliser development, also obtaining rights to new complementary geothermal assets, also consolidating STX's offices while strengthening its personnel and management staff. They also raised 75 million Australian dollars in new equity capital, and Strike Energy stock was noted at 37 cents. That's up 5.714% at 11:34 this morning Australian time. That's all for now. Stay tuned for more live updates on 𝐾𝐲𝐿 TV across the economy, markets and sectors. I'm Rachel Jones, signing off for 𝐾𝐲𝐿 TV.